right, thank you very much. Very excited to be here. Last panel is the best panel of the day, and 20 minutes from now we will all be having cocktails. So everyone smile, and we'll get through it. We'll get through this.
We have to wait 20 minutes?
Well,
Oh.
we have to talk about the entire small business regulatory environment right now in 20 minutes. My name is Jackson Mueller. I am the Associate Director of the Milken Institute. I play a large part, actually lead our FinTech program, and online lending is one of the topics that I've covered over the last 2.5 years, ever since we launched back in October of 2014. To my left is Daniel Gorfine, and I apologize, Daniel, your title is just massive, so hang on a sec. Vice President, External Affairs, and Associate General Counsel at On Deck. And then to his left, we have Jacob Haar, who's the Managing Partner of Community Investment Management. So great to have you two here. I wanted to start off by providing a little bit of a background. Both these gentlemen are part of coalitions, trade associations. You guys can let me know if I'm wrong in that. Daniel is with On Deck, and they are part of the Innovative Lending Platform Association, and Jacob is part of the Coalition for the Responsible Business Lending Coalition. Now, these are two groups that have formed over the past 2 years, along with about 5 other groups, so 7 groups in total based upon my last count. The other associations are Financial Innovation Now, the Marketplace Lending Association, the Coalition for Responsible Business Finance, the Online Lending Policy Institute, and the Small Business Finance Association, although that was more of a name change than an actual new group. So just to point my questions to you, first question to you guys, Jacob, why don't you start? Why form your group, and to what extent, and why now? You want to switch? Plan B.
Can you guys hear me?
All right. There you go.
Hooray. Thanks. I appreciate it, and thank you all for being here. The Responsible Business Lending Coalition was formed in 2015 as a diverse association of nonprofits and for-profits that are focused on serving the small business space, because we saw a need to address the gap between consumer protections and small business borrower protections. It's very exciting to see how innovative online lending and other innovative channels of finance are opening up the market to borrowers who were previously underserved. But we do see a significant amount of predatory practices, short-term practices, whether that's related to obfuscation or a number of other just abusive products and misaligned incentives. And so a number of groups came together, which include lenders, brokers, non-profit organizations, CDFIs, in addition to some of the online lenders, and one investor ourselves, and put out 6 different principles, which we have now gotten over 70 signatories as well as endorsers to be a part of that, and it's a movement that's growing. I'll just give a plug that tomorrow we're doing a luncheon on the Borrower Bill of Rights, and we'd love to welcome any of you who are interested. Just come see us afterwards.
For the 70 some odd organizations that have signed, are they across a wide range of organizations in terms of what they do and who they represent?
Absolutely. There's fintech lenders. We have a number of small business fintech lenders. In fact, the 7 lenders that our firm, Community Investment Management, invests with are all signatories to the Small Business Borrower Bill of Rights. And a number of other lenders, as well as there's a group, Small Business Majority, that actually is part of the executive committee, that is a trade association of small business owners. There are groups like Aspen Institute that are focused on research. There's really a broad swath of players and supporters who believe that we do need innovation in the small business lending market, but it needs to be one where that is borrower-centric and value creative as opposed to value extractive.
Daniel?
Yeah, great. No, and so just a step back a little bit in terms of, you mentioned a lot of different groups and trades. And, first, with any evolving industry or sector, you're going to see the development of trade associations and organizations over time. It's a sign, I think, in part of maturity of a space, but also I think these organizations can help start to establish standards that do drive further maturation and responsible growth of a sector. So high level, I think it's a good thing to see happening. The fact that there are so many in the early days also shouldn't be surprising. I think for any young industry, what you see is groups first kind of look who looks most like me, and that's what you see happen in the early days. And then over time, there's more coalescing of groups and hopefully coalescing around standards as well. So in the context of the Innovative Lending Platform Association, the ILPA, that this was an opportunity at the outset where some of the largest online small business lending platforms came together to focus on online small business lending education, advocacy, and best practices. We'll have a chance to talk more about it in a few minutes, but one of our first initiatives was something called the Smart Box, which is a model loan disclosure for the industry. So that was the first thing that we tackled. But what is really important with any of these trades and groups is to make sure we're also engaging very broadly with all involved stakeholders. And in doing that, and we actually announced today that ILPA has merged with the Coalition for Responsible Business Finance, so one of the groups that you just mentioned, in order to expand out the ILPA and generate additional momentum around things like the Smart Box and a new code of ethics that we also just published on our website this morning.
Yeah, thank you for updating me last minute on that.
Yeah.
Jacob, do you see additional organizations over the next, near future continuing to sign up to your coalition, or how are you going to, continue to evolve over the months and years?
Sure. No, absolutely. I mean, I was just came before this from a meeting of the major hedge fund managers who invest in the marketplace lending space, and one of them, in addition to us, has signed on, and we expect many more will start to sign on. I mean, I think the key is that many of us in this industry see its potential, but are fearful of where it will go if it's based on short-term incentives, predatory practices, whether you make the case for that creating trouble with regulators or just blowing up because eventually the borrowers who are not being served well will have a tough time repaying their loans. There's a long-term vision for how this technology and innovation can be used for good and for financial inclusion, et cetera. And then there's a vision of how a couple of hedge funds can make money in a short period of time. And that it will go the way of the subprime mortgage, which is much more difficult to obtain today than it was prior to that product actually being widespreadly offered.
Daniel, do you want to talk a little bit more about the merger between the two coalitions and where you guys are kind of looking to go after, especially after the merger?
No, absolutely. So look, we're really excited. As I mentioned, it's CRBF has a number of members who have a very similar commitment to responsible lending and the health of Main Street small businesses. What's exciting about the merger as well is these are not just capital providers, these are also service providers and other stakeholders in the ecosystem that help support small business lending. So, from here, and I think one of the things that we're excited having these kinds of conversations is that there really are opportunities, and this stuff doesn't happen overnight, but there is opportunity for continuing coalescence, not just of groups, but also around standards. I think a lot of folks are working really hard with the same thing in mind, which at the end of the day is the small business customer, to make sure that you're serving them to the best of your ability, and using these kinds of standards to help evolve an industry. And I think that there is still collective work that will continue to take place over the next few years.
Daniel, you had mentioned that the ILPA had launched the Smart Box initiative. I think it was late last year, correct? Jacob, your coalition has launched the Business Borrowers Bill of Rights. I guess for both of you, and Jacob, we'll start with you. Why the need for these initiatives?
Sure. Well, the Borrower Bill of Rights is 6 different rights, 6 different principles, which then are further broken out in their various different areas. One of which is transparency, and so I think the Smart Box was also this group coming also to say this is a very important issue. We may differ slightly on exactly what form that should come in, but there's a common goal towards promoting transparency in the industry, and it was a big move, I think, for the disclosing of APRs, which was not previously done in many cases. as a part of that. So, I think the key is that, look, these are versions 1.0. We actually are just coming out with the Borrower Bill of Rights 2.0 now, and we expect that we'll continue to have discussion and hopefully converge on a common understanding, because certainly that's what the regulators want.
Right.
The regulators would like to hear, players in the industry speak about a common perspective. Right now, we are young and a fragmented industry, but I think that the goal is to try to work towards a common set of rules about disclosure. But the other thing about the Borrower Bill of Rights is there's 5 other very important issues, and our hope is that the ILPA will work with us as thinking about standards with these as well. So this is, for example, a key thing, which is transparency is great, but there's also product design. I mean, the second right is around not having abusive products, having aligned incentives so that you are succeeding, no debt traps, no double dipping. I mean, these sort of things which are common practices, so that you are actually seeing the type of product really believe in the borrower and their success. That's also the third right, which is the right to responsible underwriting. The model should not be based on very high loss rates where borrowers continue to default, but there's such high rates charged that you can still make some money in that particular model. But it's predicated on the failure of many borrowers. There's also the fair treatment by brokers, which is a widespread problem in our industry. The subprime mortgage brokers have left once that was regulated and moved over to the small business lending industry. And so, there's misaligned incentives, not proper disclosures, brokers that are paid far more for a product that might be wrong for the customer. We have a principle around non-discrimination, which is probably something that we can all agree on. And there's a principle around fair collection practices to make sure that borrowers understand their rights when there is trouble and that we are proactively working with them for a reasonable outcome. So I think those are the 6 principles, as well as transparency, and they're all very important, frankly, and ones that we are certainly having conversations with regulators around, and that my hope is that as an industry we can converge on these best practices.
Daniel?
Yeah, no, and listen, one of the things that we did release today is a new code of ethics that really does get at, I think, a lot of these different areas that you guys have already done some great work as well. I will say that at the end of the day, what's really important, and has been our experience, is that you want to ensure small businesses are provided with information to make informed decisions and to ensure that they have the flexibility to select products and product structures that make sense for different needs and use cases. There's such a broad range of business needs and use cases, ranging from short term to medium term to long term, and there's different types of products that can do that. So part of the way that we approached the SmartBox initiative, which stands for straightforward metrics around rate and total cost, was with that in mind, where we said there are multiple different types of products and product structures in the market that can serve different needs. Where we saw a real opportunity was to create standardization around language and pricing metrics so that you're providing a small business customer and empowering them with as much of an apples to apples set of metrics to make comparisons as between different types of products. In that way, they can self-select what makes the most sense. So that's what we did with the SmartBox. We went through a period last summer in partnership with the AEO, the Association for Enterprise Opportunity, where we spent 90 days over the course of the summer engaging with various groups and getting a lot of feedback from groups. A lot of really great feedback from the BBOR group and some of your members that helped to inform the final model SmartBox. One of the things that we heard through that process was that it would be very useful to have an average monthly payment metric, something that helps standardize as between daily pay, weekly pay, and monthly payback products. That was very good feedback, and we used that engagement process in order to help inform the final SmartBox. But at the end of the day, I just think it's very important to understand the variety of needs and uses for small business owners, and you want to empower them to make the best decisions. So, I think that there's still a lot of places that we'll continue to be able to work together, and you are seeing the same kind of sets of issues and items, whether it's in our Code of Ethics and the BBOR, that are focusing on the same ultimate result.
If I could ask, so your today's announcement of the merger, how long did that actually take to make happen?
So really this kicked off when we started dealing with the SmartBox and trying to engage with as much of the industry as possible and nonprofit organizations. We found many folks that were similarly like-minded about what we were trying to solve for. and a similar commitment to trying to advance standards. So we ended up working very closely with the members of CRBF. They were actually big proponents of SmartBox when we released it. So this was just kind of a logical step in the evolution of those kinds of conversations.
You both had mentioned that you've worked with each other's member companies in these initiatives. To use a terrible football reference, are we first and goal from the one in terms of getting you guys together, or are we a little bit further back from coalescence between each group?
I'll let him go first, and then I'll.
I know, right? I mean, I think from our perspective, we, have been really focused on making sure that the borrower is protected. And, we have a very diverse set of group members. I mean, when you look at folks like Opportunity Fund or Axion, these are CDFIs that are very focused on the social performance metrics. And then there are companies like Lending Club and Funding Circle that are lending businesses that are in there. So it's quite a diverse group, and I think it's one where we're really going to have to see the industry move to more responsible practices overall, and not just and not necessarily just having a united code. And for that, I mean, I think our hope is that we will see better things, like, for example, the elimination of prepayment penalties in the industry. We'll see products that really are being offered that fundamentally believe in the borrower's success and provide for that. And so as a result, I mean, I don't think we're quite at the state where next week we're going to announce a merger, but I think the key is that
You'll tell me earlier.
there's we won't. But I think there's goodwill.
No, then you're
there,
going to be tweeting at
you know,
like 2 in the morning, Jackson.
Yeah. I mean, I think first comes united practices, where we all can sit around the table and say, these are a group of practices that we believe are united here, and that we can come together. And so it's less about the industry association driving that and more about the practices driving that.
Yeah, and look, I agree with that. I mean, I think what's really important, though, is process and making sure you engage. I mean, all stakeholders need to be part of discussions. And the one thing that we, try to think about is not necessarily being prescriptive or codifying, particular structures, particular models, because those don't necessarily work in all contexts. And what you want to do ultimately is empower the small business and provide as much choice and option to a small business owner, with a shared commitment to understanding that you provide complete information, so folks can make an informed decision. So I think that there's, again, it's a young industry. I think anybody who's sitting here has the same objective in mind. I think it will take time, more conversation, and I think the industry is making, actually, in a very short period of time, there's been a lot of movement, because I think there is a shared focus on what the industry should look like and where it's evolving to.
But this should be, would you both agree that this should be an industry-driven push rather than something to come out of CFPB or
Not
OCC?
necessarily. Not
Okay.
necessarily. I mean, I think that there's such a gulf between consumer protection and small business protection, and often small businesses, the people who are taking the financing, they're not professional finance teams that are evaluating these products. They are entrepreneurs who own a flower shop or an IT business or a restaurant or whatever it is. And so there really is a case, and I know, I mean, the OCC, as part of the specialty purpose charter that they've been talking about, when they requested comment on 2 issues that are core to what we're working on, which is, one, is this an opportunity to equalize protections to a certain extent between small businesses and consumers? And 2, how can we do this to promote responsible financial inclusion? And I mean, that's something that really we should mention, which is, if you look at the traditional lending, there, it underserves women-owned businesses, minority-owned businesses, and veteran-owned businesses. And those underserved demographics are using online lending much more. In fact, what we see is 28% of the small business loans, which are in our portfolio, go to women-owned businesses, which is similar to the amount of women-owned businesses that have employees, whereas traditional financing is only funding 4%. And so we are disproportionately affecting those traditionally underserved segments with this innovative online lending. The question is, are we going to do it in a way that is believing in them and participating in value creation, or are we actually going to disproportionately impact them negatively?
Yeah, I mean, so this is one area where I would take a slightly different view. I would say you can have a conversation about empowering small business owners, enhancing transparency, but that doesn't mean that you necessarily equate the small business lending market to consumer lending. I think that there's significant differences in who these borrowers are and how they're actually using funding. You know, in our experience with small business owners, they understand their business better than anybody else understands their business. It's their business. Again, I think it's still open to have a conversation to say, are there things we can do, as we've done with the Smart Box initiative, to try to enhance and empower small business owners? But I worry a little bit about conflating the two spaces, because the way that small businesses use credit is very different than the way a consumer might approach credit to, you know, purchase an automobile, buy a television, or buy a home. Very different product constructs with very different features and use cases. So I worry a little bit about the conflation there. But again, that doesn't necessarily mean you can't have a real conversation about what works well for a small business owner and what enhances transparency.
You know, I agree that there should be differences between the two, but I do think that often it's not just about transparency, it's also about product design and whether or not there are many predatory extractive models that are being promoted that, I'm not sure, even if they were transparent fully, is necessarily the right product for many small businesses. And part of that is a question of, is there an acceptable threshold for loss levels? If you have 90% of your borrowers defaulting, is that a reasonable product that one should have? I think reasonable people can probably disagree on that matter, but there is somewhat, I think some common agreement in our group around that these products should, on a net basis, be improving the lives of the borrowers that are taking them.
So I realize we have about 30 seconds left to actually talk about the regulation of small business lending. Um, Quick question for both of you. What efforts are being undertaken, either both at the state and or federal level, that concern you the most? What are the positive pieces of legislation and regulation that you've seen over the past, over the past several months, if not since you created the coalitions and associations? And what can policymakers do to kind of foster responsible innovation?
All that in now 10 seconds?
You have 10 seconds.
All right, I'm going to be quick then with this.
Just
So,
say
so look,
yes.
I think for any internet or mobile and technology-based platforms, there needs to be kind of coherent national frameworks. That can happen a few different ways. That can be things like you've heard about the OCC charter. That can be state law harmonization. There's different ways you can go about doing it. What I think is most concerning is when you see very, very idiosyncratic kind of one-off state efforts that are not coordinated, because it kind of undermines and defeats the whole purpose of the standardization of a national platform. So that allows me to answer your question by saying anything that's very idiosyncratic and one-off doesn't really make a lot of sense. Any kind of coherent, thoughtful approach and process that looks to harmonize and rationalize a regime seems to make more sense for an internet-based economy. So I'll leave it there.
Jacob?
No, I mean, I do think that, look, I mean, whether it's Treasury or the OCC, I mean, they're very well informed and I think understand these issues well. There is an innovation here which is delivering financial services to underserved small businesses, and they need, these one-off, state-specific, state-specific initiatives can pick up where there's currently a gap, but it's not a solution. It's certainly not a widespread solution. And so that balance between having really good regulation that protects borrowers needs to be there, but also it not squashing the innovation that is in fact getting financing to these underserved businesses.
Great. Gentlemen, Jackson and your panel, thank